If you're looking for stocks that aren't necessarily mainstream but are sneakily becoming giants in the shadows of booming industries with the potential to 5, 10, maybe 20x your money, you've come to the right place. And no, you don't need to be a financial genius or tech guru to see these major developments happening right now. All you need to see is the data and the numbers that support how these industries are growing and why these 5 companies in particular are a few of the favorites to benefit massively. Sure, I won't be hitting on any stocks from the Magnificent Seven like Nvidia for AI or Tesla for renewable energy. I've already covered those in another video. Anybody could talk about those. So without further ado, let's get rich. We can't quite go a stock video without mentioning artificial intelligence. And honestly, let's just cut the bullshit and call it what it is. Whether you like cheating on your homework, despise the people that do it, concerned about data security or superintelligence takeover, it really doesn't matter. Companies are investing in AI and throwing money hand over fist at it. We've already seen how Nvidia and Microsoft have fared over the past year from the AI hype. Good. This industry is growing fast. Generative AI expected to explode at an unfathomable 73% per year, with the whole AI industry growing nearly 20% over the next decade. With that being said, we get to the first of our 5 big plays, and that's Palantir. You see, despite what you may think from reading news articles or browsing the web, most AI businesses aren't exactly doing so hot. Sure, companies like Nvidia and Microsoft have it figured out, but nobody else has any idea how to make money, except this company, Palantir. Like the gold rush when people scrambled to get their picks and shovels to look for small nuggets of gold all day, only a few were able to hit it big. And Palantir is certainly on that track to do that in the AI gold mine, while the rest of their competition battles unprofitability. Take a company like C3AI. Aside from their cunning plan to claim the ticker AI and have investors blindly throw money into their stock, they lose money like it's their job, at least for now. Palantir has taken a 3-pronged approach with their Gotham, Foundry, and Apollo products, or operating systems, as their chief architect described. All of these operating systems utilize AI and big data capabilities to analyze data and facilitate decision-making from the battlefield to factory floors. Gotham is catered towards defense and intelligence, predicting where enemy ships may be heading and what the most feasible options for operators are. Foundry is for the modern enterprise, continuously learning from operator decisions to enhance future outcomes and build upon past data and analytics. And Apollo speeds up and secures software deployment, enabling greater cross-peer, cross-company, and ultimately cross-country connectivity and collaboration. And if you thought AI-assisted data analytics was only being utilized in a few high-tech industries, well, think again. Palantir is supporting projects from speeding up patient recovery time in hospitals to reducing downtime in energy distribution networks to providing new insights to the entire aviation industry. I encourage you to visit their website and read up on some of these projects because this stuff is the real deal. So we know AI technology is one of its kind, but how does Palantir separate itself from the thousands of other AI names? Well, for one, they address and adapt to so many different markets. They aren't necessarily reliant on one sector of the economy or one group of customers. They have long-standing partnerships with some of the biggest enterprises in the world, but also, and more importantly, have been consistently winning contracts from the US Department of Defense. And well, if there's one thing you can be certain of, even if the economy comes to a screeching halt and geopolitical tension continues to rise, there's one customer that will continue to spend, and that's the government. And this trend certainly doesn't seem to be stopping anytime soon. Palantir is exceptionally good at what they do, as they have been racking in the gold medals for a variety of AI-powered products. But there are some major risks for the company looking forward, with the largest being competition. Their extensive industry coverage may just be a blessing and a curse in disguise. When you stretch yourself so thin, expanding every bit of your reach and expertise into industries from healthcare to agriculture to the battlefield, other companies that specialize in a particular niche may eventually catch up and probably do it better than you can. However, that has yet to be seen as Palantir's revenue just continues to explode. An important note is the average length of their contracts continues to be a strong supporter of this revenue growth and a reliable source of profit for the company. Do your own research, but this company could be a major winner in the AI gold rush. For the second of 5 big plays that we have today, we have a stock in an industry that struggles horribly in a high interest rate environment, and this chart certainly tells the story, and that's solar. If you've watched any of my other videos, you probably know where this one is going, and that's ENPH. And you can kind of see why I'm saying that so monotonously. Despite a nightmarish time for consumers to be financing long-term projects like solar installation, adoption of the technology is nothing short of undeniable. It's clear that, at least at this point, solar is expected to absolutely dominate the total capacity of the world's energy sources, and according to the International Energy Agency, could surpass natural gas by 2026 and coal by 2027. Where does ENPH fit in, you ask? Microinverters. The small device that converts direct current from a solar panel to alternating current. Simply put, the device that makes the sun's energy usable for household appliances. And well, they happen to have nearly 50% of the global microinverter market, which is a part of a larger industry that is set to grow rapidly over the coming decade, as we just described, as well as battery, controller, and many other products. Currently, 64% of ENPH's revenue comes from the United States, which, albeit, is definitely a problem for any long-term growth prospects. But they are certainly doing more than enough to expand, launching products in South Africa, Europe, Australia, and just about all over the world in 2023. I'm giving you all good news, yet their stock is down 80%, so what's the deal? Well, first, that's because their growth has been largely stunted due to this high interest rate environment. People just aren't able to afford, nor do they want to spend the money on an expensive solar system right now. It hurts the average consumer's wallet to go to the grocery store enough already. So a solar system is certainly an overwhelming investment. And well, when your stock is trading at high multiples, thanks to your incredible growth over the past few years, it's due for some major correction when that growth starts to slow. Is this all just a passing storm, and will the sun shine bright on solar once interest rates normalize? Maybe. I'll let you do your own research. However, I can confidently say that I'm optimistic. And to be completely honest, at this point, I wish I wasn't. I go through ENPH's business model in a whole lot more detail, why they are the best play with the best products, how they are the most profitable, and why that will continue to be the case for a very, very long time in this video. Oh, and also I forgot to mention that the government is providing a 30% credit to homeowners that go solar for the next decade. So you may just be early on the green wave. The most painful part is probably already over. For the third play of the 5 that we'll be talking about today, we got another industry that struggles, what do you know, with high interest rates. One that is actually critical to solar, and that's real estate. For solar panels to go on rooftops, there needs to first be a rooftop, and below that a structure made of concrete, steel, wood, stone, brick, and that's where builders' first source comes in. BLDR is a leading supplier of building materials and services. And it's important to realize that even when housing prices come down, it certainly doesn't stop the demand for housing construction. Although spending growth isn't strong, we are sitting substantially above levels seen in years past, with new construction starts near 1.1 trillion in the United States. You'd have a pretty difficult time betting against the housing market over the long term. And although there will be bumps and rough patches, housing is always in demand. As the global population continues to explode, it is undeniable that housing demand will continue to grow for many decades to come. And as housing demand increases, so does the demand for materials, plans, engineers, and services to build those houses. When we look at a stock chart of BLDR, we can confidently say that those services and materials have been in high demand. Ironically, they benefited massively from the price boom, inflation in building materials and other commodities like lumber, hardware, and steel. Prices are certainly normalizing, but remain much, much higher than previously seen in 2020, 2021. And although today marks a time of historically unaffordable housing across the world, BLDR is able to maintain healthy profit margins and revenue growth because they aren't solely dependent on housing prices. Although they can charge more for materials and services when prices are higher, where there is demand, they can still thrive. The company has a diverse geographic footprint as it has operations in 47 of the top 50 and 86 of the top 100 US metropolitan statistical areas. In other words, they have their paws in just about every market. When one market is in the dumps, another one is on the rise, and where there is demand, there is opportunity. Not only do they have operations all across the country, but their customer base is extremely diverse, ranging from large production builders to small custom home builders, as well as multifamily builders, repair, remodeling, and light commercial contractors. The list goes on and on. No matter what way you slice it, BLDR has great visibility on the real estate sector. And no matter what kind of project, no matter where it is, and no matter who's doing it, it doesn't matter. BLDR is making money. But enough on housing, that's boring. Let's move on to our fourth of 5 big plays, and that's cryptocurrency. You see this coin right here. This coin, man, the sleeper of all coins. I'm telling you, this ditzy little cat is gonna make you Come on, man, what is this? For real, all these little coins, yeah, you may be able to trade these and make some quick cash, but as for sustainable investments, we may have to look elsewhere. And instead of investing into individual coins, why not just reap the benefits of the industry as a whole? Like Nvidia is for the AI industry, selling the chips and infrastructure during the AI gold rush, maybe Coinbase is for the cryptocurrency industry, providing over 100 million users with access to trade 248 coins. Coinbase, instead of relying solely on the ebbs and flows of the volatile crypto market, makes most of its money from users transacting and converting crypto back to fiat currency. In other words, the more active users, the more potential revenue for Coinbase. Now, it's important to realize that this term active is important. How active, even more important. Coinbase's revenue is extremely volatile, just like the overall crypto industry. If we take the price of Bitcoin and overlay it on Coinbase's revenue on a quarter-by-quarter basis, as you might expect, they make a whole lot more money when there is more interest in crypto. In other words, when Bitcoin goes up. So if you believe there is any chance cryptocurrency will become a part of mainstream finance and institutional adoption, then Coin may be one of the safest bets. Also, probably along with Bitcoin and Ethereum. However, it's definitely not a guarantee that Coin will remain a crypto brokerage leader. In fact, they aren't even close to the leader in revenue right now. If you look at this chart by Crypto Compare, ranking the quality versus quantity of crypto brokerages, in other words, how safe they are versus how much money they make, you can see Coinbase is easily the most reliable. The company operates out of the United States, so regulation and fitting into a clear legal framework is far superior to Coin's long-term existence over making money, whether the CEO likes it or not. When we look at an industry leader like Binance, sure, they make much more money than Coinbase, but is currently undergoing some massive lawsuits and potentially will never be able to pay back its debt again, and former CEO CZ is probably going to jail for some time. In the end, only the companies that comply with lawmakers and regulators will survive. The cryptocurrency landscape has been weeding out the frauds and continues to do so. And now that we talked about gambling our money away at the crypto casino, it's only natural that we move on to our next big play, 5 of 5, in that industry, online gambling. Although many investors, including myself unfortunately, like to dabble in far out of the money option calls that expire tomorrow, there's actually a more entertaining way to gamble your money away, and that's on DraftKings. Now you can actually watch football, basketball, tennis, Korean baseball at 2 in the morning, whatever your cup of tea is, and have some money on the line, sweating bets with your friends in a social setting, instead of secretly staring at a screen by yourself, watching a company report earnings and praying that you'll never have to work again. The online gambling industry is set to grow substantially in the future, and DraftKings is currently leading the charge by a slim margin over their top competitor in FanDuel. It is clear that at least for now, DraftKings revenue is on the up and up, with the CEO claiming in their last earnings call, "We are winning." And I'll tell you, at the very least, he and his C-suite certainly are winning. Although the online gambling space is growing, there is so much more room for improvement. Today, DraftKings is only fully operational in 22 of the 50 states, with about a dozen states awaiting approval. As regulators continue to give DraftKings the green light, their customer base will only follow. One of the most important statistics to look at when projecting DraftKings' future growth is their monthly unique payers and average revenue per unique payer. In their latest 2023 Q3 report, year-over-year growth is looking solid as they continue to gain traction and eat up as much market share as they possibly can. One of the top concerns with this industry as a whole is any leader's ability to maintain a healthy lead in the space. Generally speaking, at least in my experience, just about every app is exactly the same. They all give promotions, welcome offers, referral bonuses, and they spend a boatload on marketing and advertising. The one important difference that I noticed between the two big dogs in DraftKings and FanDuel is the customer experience. Say you have a bet on a player and that player goes on to get injured very early in the game. DraftKings will almost always refund your bet. On the other hand, FanDuel robs you of your money even if that player only takes one step on the field, which, as you could imagine, can have the betting community in an absolute uproar. So in my opinion, that's one of the key features that is keeping DraftKings as the leader of the space, at least for now. Disney just released ESPN Bet in select locations, and other sportsbooks are popping up left and right. DraftKings certainly has the early mover advantage and has been able to swallow up a lot of the market share. Their ability to retain that market share, on the other hand, has yet to be seen. But one thing we can definitely bet on is the boom in sports betting, and there's certainly no sign of slowing down. And there you have it. Those are the 5 big plays that I have for you today. And at the very least, I hope this kept you entertained and taught you something new, and hopefully makes you some money along the way. Do your own research, and I appreciate you watching. I'll see you in the next one. Peace!